All right, traders, Fridays are known for being my best trading days within the market statistically, and I'm going to prepare you to trade the best setups at the best prices. I am also going to be recapping my trade that I made today. I ended up buying into SPY put options heavily at the highs into the morning between 9:30 and 9:37 a.m. I kept scaling into puts once I felt more comfortable and holding. Once I felt more certain that it was going to crash, I kept scaling in and kept scaling in and kept adding into puts, even when I was down about 9%. And I did end up taking a large position size. And that brought the portfolio up 37% on the day. As you know, I had a bigger red day yesterday. It was the first red day of the small account challenge. I started the small account with $3,941 last Monday, traded every single day since then. 9 days, had my first red day yesterday, and then 8 green days. And in terms of today, I bounced back with a 37% return. Not only did I take a big position size, breaking my rule, but it hit, and it hit big. This was a 98% return. In terms of the real-time trade alerts and my average sells, this was a 55% ROI on investment within 30 minutes. Alerted real-time within Trader Society, as you can see right here at 9:33 a.m. I alerted that I bought the slightly out of money SPY put option 401 strike that expires tomorrow, and I ended up getting in at 220, and I kept scaling in as I became more confident, as I became more certain that this was going to crash. I continue to scale in. If I'm doing a big position size, I will never do it all at once. But in terms of my entry, I keep it very, very close. I don't scale into losses. I did end up adding some when I was down about 9%. It had a small little move up. I added some because the wicks formed and it made sense. And I kept scaling in, and the trade worked out phenomenally. Rapid fire within about 15 minutes. I was up 50% on that. And then 30 minutes later, I was up 90%, and I sold it perfectly. I was selling on the way down, taking my 50%, 60% gains, left a little on to ride, and then I sold the entire position, the small size that I had left, at 10:35 a.m. right before SPY exploded to the upside. And then from there, I called it for the day. So with that being said, I'm going to show you how I was able to determine that SPY was going to crash this morning. I'm also going to explain to you on how I was able to safely take a big position size. Now, in terms of my rules, I did break one of my rules today, but I've traded so much better compared to yesterday. Yesterday, I broke so many rules. Terrible trading day yesterday. But in terms of today, I only broke one rule, and it was a big position size, but I didn't take it all at once. I scaled in and averaged in accordingly. And I do believe if you are certain and you get that amazing confirmation and you're in the position, I do believe it's smart to add. If you are certain and more confident in the position, and it's either at your initial entry or barely below or above your initial entry, I think it's smart to add into a very certain confirmation, and that's what I was doing. But the position size was too big. Moving forward, especially now that I've hit really big on a trade with the small account challenge, right? If I continue to trade this way, the losses will be big, right? So with that being said, I'm going to scale back. I'm going to scale back in size. I want to do no more than 30%, but I am going to be scaling into positions when I'm certain and confident. So when I enter, it's basically always going to be a starting position, and that starting position will be 10 to 20% of my portfolio. And then if I'm certain that it's going to work and I know the timing's about to be spot on, I will look to add a little bit more. But I just got to scale back in size and I will be completely fine. So with that being said, I'm going to recap the trade here real quick, and I'm going to prepare to trade the best setups at the best prices, guys. META is going to be one of the best setups for tomorrow. I'm going to share that with you. We're going to be going over SIGA, Snapchat. We got quite a few to go over here, but the main one is going to be META. So in terms of the recap on SPY, why? Why did I buy puts on SPY? If you watched my previous video, I told you guys that in terms of the SPY, my game plan was that I was expecting to trade in a range. I was expecting to trade in a range. And I told you guys the expected range, the top was expected to be $403, which was yesterday's high. That was expected to be the top of the range right here. Yesterday's high, which was at $403. As you can see right here at the top of this, we're going to draw a trend line right here. This is a nice key level with big downside potential. And I also told you guys, if you've been following this channel for weeks, I told you guys, I am going to look to scalp puts when the gap fills at 40144. And if you watched yesterday's video, I told you top of the channel 403. And I also told you if 40144 cracks, if the previous closing price cracks, which was at 401, then those will all be confirmations to buy puts. Now in this situation, I didn't buy puts at the key breakdown. I decided to go with the best resistance level possible. Now, do I believe it made sense to buy puts at the key breakdown? I'm going to explain to you where you could have added, but in terms of my adding, I identified the best price. The top of the channel was towards that 400 yesterday's highs, 403 level, and I was looking and we were overextended. We were struggling. It was already struggling at the previous closing price. It went above, then it went below, already struggling at the previous closing price 414, which is bearish. It was extremely overbought for the micro. I've been anticipating this trade for several weeks. If you've been following my channel, I've been consistently saying I'm looking to scalp puts at 4144 once it reacts as a resistance. And then I told you in terms of swing trades, it has to form a bearish candlestick on the daily once it fills the gap, and it never formed the bearish candlestick on the daily, which is why I never swing traded puts, even though it was at one of my best key levels. You have to use and trade the confirmation. But in terms of day trading, my day trading confirmation's triggered, and I'm going to show you the confirmations right here. Wicks. If I see Wicks at the best level when SPY is this overextended and overreacting, I will look to scalp puts. I look at this as a very low risk, high reward setup. It has big downside potential and it has very little upside potential for the micro, because this is such a best entry. Like I told you guys yesterday, if you watch my videos, the expected range was top 403. And then the bottom, I literally said 398. 398 is the expected trading range. Now we did end up breaking out of the range. It wasn't a breakdown. It was a breakout. But we did end up breaking out of the range, right? So if this were to break out, I would have been stopped out instantly, because this is the best price possible. If puts cannot work here, then you must get stopped out. So my max risk on this trade, I was entering when this was at 402.50s, 402.70s, into these top wicks, into these top wicks, into these lower highs, adding into all those ovals. That's where I was buying puts. It was the best price possible. The setup was a gap close reversal. It filled the gap, showing signs of weakness, forming top wicks, breaking down lower highs. And it was on track to go back to the previous closing price. And if that cracks and reacts as a resistance, top wick, it's going to continue to sell off and hit that 398 level. Like I told you guys in yesterday's video, 398. And then you can see once it hit it, it started forming a dragonfly trend reversal doji that I talk about all the time. If you see this at support at the low of the channel, then it's going to start reversing. And it kept reversing, it kept reversing, it kept holding. So that means you have to exit puts and lock in the profits. You can no longer aim for that bigger move because it's held too long. It's consolidated too long. It's been trying to break out. It's been forming bullish trend reversal candlesticks. So that's when you know when to sell. In terms of when do you know when to hold, right here, bearish wicks, breaks down, lower highs, cracks the support right here, lower highs, lower highs, lower highs. The top of these wicks are now at your previous support, where it was ripping up, trying to break above those highs from yesterday, which is extremely bearish. I tell you guys all the time, these are confirmations to be adding right here. These are confirmations to be adding, because it failed to break yesterday's high. It cracked this support, and it's turning this support into the new top wick, the new lower highs, all bearish confirmations. Top wicks sells off massively, best level possible. Now, in terms of, does it make sense to add right here at the previous closing price? So in terms of key breakdowns, this is a key breakdown, this 401 level, even though it is a nice resistance on the daily. Well, it used to be a nice resistance on the daily. If it cracks, I prefer to wait for it to go back up. And then if it reacts as a resistance, forms top wicks right here, then I would look to add to puts right around here. But in this situation, I wouldn't have even done that if that occurred, because I already scaled in at the best prices. I took advantage of the best top wicks right here. I took advantage of the lower highs right here. And I also took advantage of the lower highs right here. When this previous support reacts as a resistance, that's bearish. When this previous support, see the lows of this candle now reacting as top wicks, sells off. Lows of these candles right here, cracks, now reacting as the top wicks, sells off. Lower highs, bearish, hits the previous closing price. And if it reacts bearish and cracks, forms the wick at the previous closing price, it will drop like rapid fire. And then you start taking the gains and profits once it starts forming green candles, consolidating, pushing above lower highs. You know, if it breaks above 400, this thing's going to rocket back up, right? So very low risk, high reward trade. This was my risk. If this were to happen when I was in the trade, I'll show you. This is exactly where I would have been stopped out. I would have been stopped out right here. If we had some nice green candles coming in and it hit 403, I would have been stopped out. But it never occurred. All of the bearish reactions were there. This is very simple stuff. Yesterday's highs of the retest reacted bearish. How do we know that it reacted bearish? Because it formed wicks. The bearish top wick, the little pullback, lower high. The top of these wicks are now at the low of these previous candles, which is bearish. That means it's forming lower highs. It cracks support right here, and now the top of these wicks are now at that previous support, that low. That's bearish. That means it's going to hit the previous closing price. When it hits the previous closing price, if it forms green candlesticks, starts consolidating, starts balancing, exit puts. Max risk could be right towards here. You have to lower your risk, right, to protect the profits. You have to drop the stop loss. You don't risk 403 when it already tanks. You now risk 402 when it tanks. And it just never pulled back. It just never spiked. It just never spiked back. And it just kept selling off. And you know when to take gains because I told you. 398 lows, trend reversal candlestick, consolidated too long, held too long. And once it starts to break out and break above those resistance right here at 400, it's going to start to have a reversal. And like I told you guys all the time, this was an opportunity to buy a call right here. If it breaks above the previous closing price and forms higher support, I go over this in my videos all the time, then SPY is going to rally back up towards the top. So how can you confirm that previous support is now bullish? It's breaking above the lower highs. It's forming the bottom wicks, not top wicks, bottom wicks. Breaks out, higher support, breaks out, bullish. Opportunity to scalp calls right around here at 401 as well. So with that being said, that is the recap of the trade. This was literally perfect. As you can see right here, I sold my last size at 10:35 a.m. right before it started exploding. I was trying my best to be patient with some small size. And the entry was perfect. This blue line is where I entered my puts. This was my average. The low was 188 right at the time. Obviously, it's a lot lower now. But the low was at 188 at the time. And I got in at an average of like 216. I started getting in at 227. I added when I was down 9%, and then I added when I was barely down, and I scaled in perfectly, and it rocketed from 188 to 428 within 30 single minutes. That was a 98% return at the peak in terms of my average sells, 55% return on like a 75% plus position size. Only thing that I did wrong was take a massive position size. I went against the rules. But the reason why I did it was, and this is something I want to explain to you, if you do want to take bigger position sizes, first of all, don't do it. But if you're going to do it, I wouldn't go above 20%. For me, I might look to go 30% in certain situations, but it makes sense to add a little size, not a lot, just a tiny bit. It makes sense to scale in a little bit when it's forming lower highs that aren't too far away from your best entry. This is your best entry right here, which was towards yesterday's highs. It had a pullback, lower highs, top wicks, confirmation to add. That is strength to be adding. It cracks support, confirmation into wicks, turning this support into now resistance. That is strength to be adding. So in terms of big position sizes, what I can tell you about big position sizes is, you have to scale into them. But your entries have to be perfect with your initial entry. You should not be scaling into big losses. If you're down like 9% or 10% and it's starting to look really great and you're confident and it's forming lower highs on puts, it's forming bearish confirmations, then yeah, add a little bit into puts, average down a tiny bit. If you're barely up or if you're up a tiny bit, then you could scale in as well if it looks like in your favor. So in terms of my style of scaling in, it's more of like certainty. So I make sure I get the best entry initially. It's always that. It's never like, oh, I'm taking a starter position here. Like, no, it's best entry at the best prices. And then when it appears as I'm holding, if it appears to be more in my favor, close to my entry, slightly below my entry, or ideally, slightly under my entry where I'm down just a little bit, but it's appearing to be strongly in my favor, I will look to average into that. But I will never average into a big loss. If I'm wrong, I'm wrong. If my first entry is wrong, then I'm wrong. But if I'm only down like 8-9% and I'm getting lower highs, top wicks, breakdowns, more lower highs, that's pure confidence. That is pure confidence and pure certainty that it makes sense to add here And it makes even more sense to add here as well, because it cracked support and formed new lower highs, failing to go back to yesterday's highs. And you know this is extremely overextended and is due for a pullback. And we saw what happened yesterday. It had a nice little rapid fire drop when it failed to break above this level. Same exact thing today, man. The 5-minute chart gave it all away as well. These top wicks, it was due for a pullback. And if it cracks that previous closing price, it drops like rapid fire. And in terms of when to sell, you know when to sell. I told you guys 398. All the wicks gave it away. Bottom wick, bottom wick, bottom wick, bottom wick. You cannot hold puts into this strong consolidation. You hold through big red candles. You sell into the floor, into these wicks, into these wicks, into these wicks. This was very generous. SPY had a nice bounce here. And for those who held puts through that, it came right back down. You now know that that's heavy support with big upside potential. So you now know that you better be selling right here if you ended up, holding through that bounce, right? So that's that, man. Phenomenal trade. Sold along the way on the way down, and then I sold right before it exploded. Perfect exits, perfect entries. So one tip I can give you with big position sizes is, first of all, don't take them. Figure out your max position size you want to take, whether that's 20% or 30%. If you're a beginner, you shouldn't be doing more than 20%. Try to keep it at 10%. You should only be taking big position sizes when you're like a pro and you're certain and you're confident, you have a lot of experience. You should never be doing it in early stages. The early stages are where you learn. There's so many mistakes and there's so many lessons that you're going to learn in the beginning. And then from there, once you learn them, it's just being disciplined enough to not repeat them. So at first, it's not even about making money. It's really just about learning at first and paying your tuition to the market. And then once you have that knowledge and experience, then you could look to take slightly bigger position sizes. I wouldn't do it backwards and pay a lot of money for the market's tuition. You're better off giving it to someone who's actually going to help and teach you than to giving it into the market. Because in terms of the market, you can just trade with light size and learn just as much as someone trading with bigger size. So with that being said, that was the trade recap. Trend reversal candlestick gave it all away. In terms of, if you watch my last video, it goes over how I came up with that 398 to 403 theory. Right here, I noticed that 398 was previous resistance. It now had a breakout with big upside potential. So I was starting to believe, due to the daily charts that I was seeing, it was likely going to react as support and trade in a channel. And then in terms of some point, whether that was this week or next week, we were either going to see a break above 403 or a break below 398. And in terms of today, the break below 398 was simply not confirmed. It held too long. It formed all the trend reversal candlesticks. It formed all the bullish wicks. In terms of puts, if this sells off like rapid fire and it starts forming dojis and bottom wicks, to sell into those dips. Not to be buying or adding into that, hoping that it's going to crack, right? So we're getting the best entries. We're exiting at the best prices possible. And today was absolutely phenomenal. Trend reversal candlestick right here. All the confirmations worked, right? And then in terms of the breakout, this was crazy. It went above 403. So like I said in my video, in terms of other big moves, if it pushes above 403, the bears get trapped and it starts to rocket to fill the next gap. If it breaks below 398, the bulls get trapped and it starts to go back down to fill the gap at 391. They couldn't crack support. They pushed above lower highs, which is all bullish, and then it went red to green, which is all bullish. And then right here, once it had a breakout, it formed higher support above the highs. That's when the bulls are in control, and you respect the fact and you don't play puts. And I respected the fact. I stayed away from puts the entire day. Ever since I exited, I stayed away from puts. This was nothing but bullish territory. It held 398 perfectly. It flipped red to green, and it turned the previous high into support. And when it breaks above that high and reacts to support, it will rocket and start to fill the next gap that is waiting to fill above, which is right here at $417.39. That is the recap. That is how I was able to trade the best setups at the best prices. And in terms of my scaling, I hope that made sense in terms of my scaling. But if you are going to scale, don't scale that big, taking like a 70% position size, guys. I've hit big. And fortunately for me, it was green, not that it needed to be. Now, since I've hit so big, I must do my best to follow the rules, to scale back in my position sizes, to protect my capital, to protect my profits. But it is just truly crazy how fast an account could scale. If you are compounding an account, it's insane. I want you to think about it like this. This account started with $3,941. The daily goal was a 2% average return, right? So some days a little bit more, some days a little bit less, some days are red days, right? With that being said, a 2% return of $4,000 account balance is $80. The portfolio is now at $6,400. In terms of my raise within the past 9 days, that's going from making $80 a day, if you're averaging 2%, to now making $128 a day, right? For making 2%. That raise is insane. That's like a 60% plus raise. And that's just the first 9 days. In terms of compounding interest, and the way it works is, at first, you have to understand the dollar gains are going to be very, very small. You're not going to be making a lot of money. It's going to be very small. But once you start getting to 5 figures, it starts to go like this. And if you were consistent with it and then you get to 6 figures, it just goes like that. And it just keeps on going straight up. So the thing is, dollar gains, I'm telling you, pull out a compound interest calculator. It takes about 1 year. If you can consistently compound a small account for 1 year straight and make a 2% return, big difference between 1% and 2% compounded, right? Your results will be life-changing. And then if you can pull that off, consistency for 1 year, then the dollar gain returns are insane. It's no longer just like, so you need to understand a 2% return is absolutely insane daily. But if you have a small account, it's not a lot dollar-wise. So don't ever focus on the dollars. Just focus on the percentages. And then you will realize once it grows of consistency a year after compounding, then your dollar gains are going to be massive. And the percentage gains always stay the same. You always keep the percentage gains the same, right? So with that being said, compound interest, like I said, it starts off very slow dollar-wise. The percentage stays the same. And then a year of 2% compounding consistently, rapid fire upside. That is how it goes. Just pull out a compound interest calculator. It's very simple. Now, let's get into how to trade the best setups. If you want to trade with me live tomorrow at Market Open, it is going to be the first link down below in the description. Fridays are expected to be my best days for the market. Statistically proven, those are my best days. If you want to trade live with me tomorrow, Market Open, we're going to be trading like snipers, same day expirations, very lucrative percentage returns, getting in, getting out, scalping like a sniper, not holding too long. I held these puts for about 30 minutes. I was selling into like a 15 to 25 minute hold. And with that being said, if you do want to join us, it's going to be the first link down below in the description. You get instant lifetime access. You also get to participate in the small account challenge, which is something I'm doing for a limited time only to help grow nearly 1,000 members accounts that are starting with small accounts. You also get access to the video lesson library, how to trade the best setups at the best prices, learn the unique price action trading strategies, risk management, position sizing, psychology to trading. You also get access to live trading streams that I do every single day at Market Open, access to the voice channel, the real-time live trade alerts in voice, the real-time trade alerts within the Discord chat, the members within the Discord chat. You will surround yourself with snipers who are trading the best setups at the best prices, giving out the best alerts possible with these unique gap trading strategies that I've created. If this is what you want to do and trade like a sniper, this is going to be the best options trading program for you. You can also do it with stocks. And like I said, our daily goal is 2% compounded daily. So with that being said, let's get into the best setups at the best prices. So it's going to be the first link down below in the description if you do want to join. So in terms of the SPY, you need to understand we are seeing a strong shift in momentum here in terms of the bulls really taking over. They already went above the gap fill level. They already turned yesterday's highs into support, which is very, very bullish. And some people have been talking about where the market has already bombed out, and we're going to start to see a more bullish rally heading into this, the second part of the year, into the next 6 months of the end of this year, right? So with that being said, that's what we're starting to see occur. And there has been no bearish reactions or no reasons to be swing trading SPY puts. It's crazy. All I've been doing is buying puts. My win rate is absolutely insane. It's a 90% plus win rate. Since the bottom, all I've been doing is buying put options almost every single day. And the portfolio just keeps on going up substantially because I'm scalping like a sniper. I know when to get in. I know when to get out. I know how to time it perfectly. And I know when to add. I know when it makes sense to add some size. And that's what I did the best today, was adding size perfectly and getting the best entries. Having a big position size and a big percentage win. That's like the best combination you can possibly do. Trading there perfect today. But anyways, here's what we need to understand about the SPY right now. Key levels. Let's update our key levels. I want you to understand that It's been very bullish. It's been very bullish. It bottomed at 398 already towards that previous resistance. That's now reacted as support. We broke above yesterday's highs, now reacting as support. These are all very bullish confirmations. Is this an overreaction? Yes. Is it due for some sort of pullback? Yes. But you have to trade smartly. So with that being said, for someone who's been doing extremely well buying puts literally every single day for the past 9 days with only one red day, and the red day is because I broke my rules. I'm just going to keep on doing what I'm doing despite how bullish or how high it's going. I'm just going to keep sticking to what I'm doing, scalping like a sniper. So these are the scalps that I'm seeing right now. And this is what I want you to understand. SPY closed at 406. The best resistance level can now be found in the extended hours trading session, which is why you always have to watch after hours and pre-market trading. So heading into tomorrow, one of the best levels to be trading at is going to be $409.72, a nice key hole around 410. If we go to the daily chart, let's see if we can identify any significance with this 410 level. Let's see if there's anything that the chart is telling us in terms of the daily, right? So after hours is telling us it's already dropping from 409.72, 410. Let's see what the daily chart is telling us here. Okay, so we got some nice wicks. We got some nice wicks at 406. That's going to be a key level. 406.07. That's a key support level with big upside potential or big downside potential. Mark that level down. Now, in terms of resistance, you could see right here, there's not much in terms of 410. We're not seeing too much right now. No, we're not. So in terms of the daily chart, we're not seeing too much with this 410. We're seeing some at 408.57. So a nice, okay, this is interesting. This is telling me something right here. A nice little move up with an overreaction prior, move up, tops out at 408.57, sells off. So those are the key levels. Those are some key levels. 408.57, but we're going to go with the after hours level, 409.72, and 411.74. These are the best levels that I'm seeing for tomorrow. I want you to write all of this down. Here's what I want you to understand. 409.72 is a key level. If it reacts bearish in the morning, forming a similar pattern, then I will look to play puts at that level. If it breaks above 410, that's the max risk. The next level for puts will be 412. If it breaks above 410, the next level for puts will be 412 for a quick micro scalp. Now, here's what I want you to understand. This is a key level that I need you to pay attention to tomorrow in terms of support and in terms of pullbacks. The previous closing price. Right now, SPY is gapping up. It is on track to open up with a gap up. For those of you who stay to the end of these videos, you truly get rewarded with the best information. I've seen this happen all the time where the SPY has a gap up prior to having many overreactions to the upside, and it occurs on Friday. And then on Friday, it comes crashing back down to fill that gap at open. And then if it goes below the previous closing price, which is 406.07, it is truly the ultimate bull trap, and SPY will get absolutely crushed to $400 if it cracks 406 and turns it into resistance. So one possibility that I want to put you in terms of tomorrow is I want you to understand that I've seen SPY gap up many times when it has an overreaction to the upside on a Friday, and it is currently on track to gap up. And if it forms resistance at these key levels that I'm discussing, 409.72, right? If it forms resistance towards there, if it starts forming resistance at these key resistance levels, I will look to scalp puts, and SPY will likely, as long as we stay under 410, it will likely fill the gap at 406.07. Then there will be a gap to fill at 406.07. If that reacts as support, so if you see it forming dojis, forming bullish candlesticks, bullish bottom wicks at 406.07, it's bullish. Now, if you see it rapid fire crash below 406.07, ultimate bull trap. It'll sell off to like 11:30 a.m., 12 p.m. It gets absolutely crushed. How low can it go? Probably 402, 402, 403, right around 402. I would go with those levels for tomorrow. So there's two parts to the potential put opportunity. The first part is you buy puts at the best resistance levels possible, which is currently 409.72 to 410. If it breaks above that, then 412, right? So if you get stopped out, you get stopped out. Look to enter at 412. Very simple stuff. Then from there, the ultimate price target would be for the gap to fill below 406.07. You automatically lock in gains at 406.07. But I want you to understand is if 406.7 reacts as a resistance, it cracks through. Basically, if it looks like this initially from filling that gap, it is going to sell off hard. And in terms of how hard are we going to sell off to? 403 to 402. Locking gains at 403 because that previous resistance is at support. So that is one of my theories for the SPY tomorrow. I have no interest in buying calls. Now, if I were to buy calls tomorrow, it would probably be later in the day if this did happen. And key levels of interest that you have to pay attention to are 406.07 and 403 to 402. Just to understand, if SPY cracks 406, it's likely going to bounce at 402 to 403, but that will create a really nasty bull trap. But it can always come back like it did midday. We see this all the time. I talk about this all the time where stocks have reversals at 10 a.m. Where if SPY is a massive sell-off, it can easily have a reversal at around 10 a.m., which explains why I was selling into 10 to 10:30 a.m. So yeah, that's my game plan for tomorrow. Keeping it very simple. Key levels 409.72 to 410. If it goes above that, stopped out. Remember, use the bearish confirmations. Next level for puts is 412. Overall targets is going to be the previous closing price at 406.07. That is a make it or break it support level. If it cracks that level, it will go to 403. If it holds 406, it rockets back up, has a bullish reversal, automatically takes some profits off at 406.07. See how it reacts from there. If 406.07 cracks, reacts as a resistance, it pulls back to 403. That's the level, 403. So key resistance levels for tomorrow, 410. If it goes above, 412. Key support levels for tomorrow, 406. If it holds, it rockets back up. If it crashes, it goes to 403, which will probably be the best support level for tomorrow. Those are the key levels. 412, 410. I'm willing to take 410 and get stopped out and enter at 412, not a problem. 412, 410, 406, and 403. Those are your four best prices. The lower the better for calls, the higher the better for puts. I will look for the bearish wicks, the bearish confirmations, and I will continue to do what I do best, which is scalping these put options. Even when the market is flipping bullish, the strategy is still working because this is a strategy that's not meant to be held. This is a strategy that is meant to be scalped. In terms of holding, I need a swing trade confirmation, which is not determined until 3:55 p.m. You know, things were looking extremely bearish on the daily. It was forming a very bearish daily candlestick. I did want to hold, but I was already up substantially. And due to all of the bullish micro trend reversal candlesticks, the bullish wicks, I had to exit and take my profits no matter what I thought. This is why swing trades are not determined until 3:55 p.m. because the market can flip at any period. I can see how if you bought puts right here and you were bearish, it can be tempting to hold puts because you're up substantially and you know if it tanks tomorrow, your puts will be up crazy because your entry is so good. But the problem with entering a swing trade early is the market can flip, and my swing trading strategy relies on a bearish candlestick when swing trading puts and a bullish candlestick when swing trading calls. And that candlestick may look bearish at the time, but if the market flips, that candlestick will turn bullish. Therefore, there's no reason to swing trade. So it's like you can't swing trade early. It's just not possible. You just can't do it. It can be tempting because your entry is so good, but what you have to do is you have to take the profits, day trade it, and then in terms of swing trading, wait until 3:55 p.m. If the SPY did get a bearish, if it closed weak, red today, if it closed under 403 today, I would have swing trade puts if we closed red today, but it didn't. So I didn't swing trade the puts, and that is not determined until the last 5 minutes of the close. So in terms of my swing trading strategy, it relies on a daily candlestick that forms at the end of the day, and the day I enter the swing trade will not affect me. The next day will affect me. So when I enter my swing trade, the day I enter has no effect on me. It's all aimed towards the next day based off a daily candlestick, right? And those daily candlesticks have never formed. So that's my thoughts. That's my analysis for the SPY heading into tomorrow. This is truly going to be an insane day. Now, I want to bring some awareness to a couple stocks. Meta. Meta's looking pretty bullish, man. Pretty bullish. And the reason why I'm saying this is, look at this. We have a strong support channel right here. This nice triple bottom on the daily. This looks just like SPY. It looks just like SPY when SPY was right around here. It looks just like SPY, except SPY is blasted off and Meta hasn't. So this could be a delayed reaction where Meta stock follows the SPY. And some other things I like about META right now is there was a gap to fill here at 158.05, and there was a gap to fill here at 158.57. It has filled these gaps twice, formed a bullish trend reversal candlestick, which is extremely bullish, and there's a gap to fill above and a gap to fill above. And you could see right here, there was a gap to fill below on Meta, and it filled this gap, forming that same wick, that bullish wick at the gap fill. And look what it's doing now. gap fill, bullish wick, same things. If history repeats itself, Meta stock is going to rocket tomorrow. This is why I save the best information till the end of these videos. I'm going to give you guys the full game plan within Trader Society heading tomorrow. But in terms of right now, what I can say about this is the chart is extremely bullish. It's on track to have a gap close reversal. It is oversold. There's a gap to fill above at 169.58. Last time it bottomed at this level forming this bullish wick, it had a massive green day the next day. So yeah, we're looking really bullish on META. So the good thing is it hasn't taken off yet. It's still early. So what I'm going to be looking for heading into tomorrow is, and this is going to be my game plan, it needs to push above 160.72, the previous closing price. So right now it's having a small little gap up. It's up about $1, 80 cents. So if this can turn into support and react to support, and if we can start pushing above this 163, forming support at 163 in terms of dip levels, holding 160.72, I will look to buy calls on Meta stock. The max risk on those will be 160.72. The true best price is at 154.85. Heading into tomorrow, I'm convinced that Meta stock will be bullish if it stays above 160.72. If that cracks and reacts as resistance, I am micro bearish. If it flips and goes above at 160.72, I then turn micro bullish, right? Same thing with the SPY in the previous closing price. If the SPY cracks the previous closing price, I am automatically micro bearish. If the SPY rips back up to the previous closing price and reacts to support, I then flip automatically bullish. And if I don't have that flip in the moment, that means that I am personally breaking my rules and breaking my strategies, right? So understand how flip-flops work at the previous closing prices. Resistance at previous closing prices, micro bearish. Support at previous closing prices, micro bullish. Went over this several times in my previous videos on the SPY. In terms of SIGA, it's going crazy with the whole monkeypox situation. This one is getting very interesting. I did want to buy this one, but I never did because it didn't get low enough to where I wanted to. By the time I was watching it, it already just kept pushing up, and I didn't want to chase. So for this one, the daily chart lacks all credentials. It's starting to look like it's giving me mRNA vibes. It's giving me mRNA vibes where this can be a serious long-term investment. That's what it's giving me, man. It's giving me like this can just take off for the long term and just continue to rise over time. So my game plan is I want to swing trade this like I was planning to, but I need a big pullback. And I don't know when that pullback is going to occur, and I don't want to short this or buy puts. So I'm overall bullish for the long term, and I'm looking for an entry. The new best entries on this would be like right here, 1570. 1570 would be the new best entry. I'm waiting for a big pullback. We get a big pullback, I will look to scale in, buy, average down. I'm bullish long term on this one. Just know that's a long-term play, and it is in a sense kind of a YOLO, but I think that will work out and size accordingly when the time comes. So that's on the back burner. Snapchat. What did I tell you about Snapchat? I told you guys, do not sleep. If you watched my videos way back, do not sleep at 947, man. People should be clipping these videos. I should have people clipping these videos and just showing people, look what happened at these prices. I told you guys 947. 947 was the lowest gap to fill below on Snapchat. That's where it should have a reversal. It finally filled that gap at 947. And you know when that gap fills and reacts to support to buy the calls. And it's been exploding ever since. So Snapchat's in the process of having a bullish gap close reversal. It's extremely oversold for the micro. And stocks have been running like crazy. I think Snapchat and Meta are going to be due for some spikes here. I think they're going to be delayed reactions, whereas a lot of stocks have already taken off like crazy. I think they're going to be due for some reversals. I'm keeping an eye on Snapchat. For this to remain bullish, it needs to stay above 947, and then it needs to break above 999. I'm just on the sidelines right now. VERU, second day of consolidation at $12 level. It's due for a rip up to fill the gap at 1331, but it's a tough one to kind of buy and hold. I'm on the sidelines. The true best entry is right here at 903. At some point, this will spike again. I don't think it's quite over, but I don't want to get in just yet. So it's on the sidelines, kind of like with SAGA, except that one is a way better investment and has much bigger upside potential, in my opinion. If you're looking to do a YOLO, long-term SIGA, but only buy on big pullbacks. Do not buy into rips. At some point, this will have a big pullback. You can see right here, it had a big pullback here. It had a big pullback right here. Whenever it happens, it happens. When the big pullback comes and we get a green candlestick, we get like 2 days of consolidation, I will probably look to start scaling into some long-term calls and probably picking up some shares as well, because it's giving off that mRNA vibe where long-term this can seriously run. It's broken above all key levels. And if you compare the daily chart to when mRNA went crazy, it's looking very similar. And this is pushing new all-time highs. So anything can happen. And in terms of anything happening, it's likely going to be for the upside with SIGA. So that's the long-term play that I'm waiting for a pullback on. Phase is trash. We'll see how it reacts at 958. We'll see how we react at 958. We got a lot of support. We got a gap to fill below at 958. Could have the reversal push for the gap to fill above at 1218. Puts at 1218. Potential calls at 958. Overall trash stock. Looking for bullish and bearish reactions at those key levels. Not an easy one to trade. That's for sure. That's going to require a lot of experience. Roblox flipped a little bullish there. Not interested in any of these at the moment. Nope, not interested in any of these at the moment. I will say this, Redbox. If you want to buy Redbox, look at 305. Redbox flipped bearish. This is now overall bearish. It'll go lower within time. 305, I'll look for an entry on that, possibly around 3, low 2s. We'll see for long-term play. Have to see. That's going to be a tough one too. So these long-term plays that I'm talking about right now, take these with a grain of salt. These require a lot of experience and analysis, and these are way early in. So I'm just, just talking about them for the moment. Shopify, not too interested at the moment. Amazon, not too interested at the moment. So here's the deal. Top plays for tomorrow, SPY, Meta. Those are the top two. Nothing really else for tomorrow. Let's take a look at Pinterest here. Pinterest had the gap close reversal, so this is likely what's going to happen with SPY. I mean, not with SPY, with Meta, where it bottoms at key support, forms a bullish candlestick, has the gap close reversal, starts to rocket, right? Make it or break it level on Pinterest is going to be 1943. I'm going to see how it reacts tomorrow at 1943. If it breaks out and turns into support, it's going to start to rocket to fill the gap. Best price for puts is at 2094. Best price for calls is at 1725. Make it or break it level in the middle is 1943. I will look to see how it reacts towards there. That is my thoughts. That is my analysis. Tomorrow is expected to be a massive green day with the SPY and with the Meta stock analysis. If you do want to be a part of Trader Society, it is going to be that first link down below in the description. If you want to learn more about it, everything is explained on that page. As soon as you join, you get instant lifetime access, and the small account challenge is for a limited time only. I'm telling you guys, this is a sacrifice I'm making for students personally. I know how to grow a big account, and I'm still growing a big account on the sidelines, and I'm mainly waiting for some swing trades with the big account. But this truly is a sacrifice on my end in terms of income, but I'm willing to make the sacrifice. I want that title, and I want to help my group. We've hit a large amount of numbers, and I want to help them grow a small account because that's what they've requested most. Am I going to do this every single year? No, this is extremely rare for me. Like I said, I have people on my radar. I know a couple traders as well. I am planning to hire them within time. I have some people in mind to grow small accounts. I am planning to hire people within Trader Society that solely focus on growing small accounts. And then if they want, they can grow larger accounts behind the scenes. But, having this documented will be a very valuable asset that I can turn into a course that'll show people step by step, how to grow a small account. And that's what I'm working on, videos behind the scenes and stuff like that. I'm documenting the entire journey. If you're in Trader Society now, you get to witness it in real time, and you also get access, for a lifetime. You get access to that course and all that stuff like that if you join now. Best time to join is right now. I'm only growing a small account for a limited time only. And this is a sacrifice I'm willing to make for the students within Trader Society. It's been the most requested thing, and that's what I'm doing for them. And it is growing rapid fire, now up 63% in 9 days. I will see you guys tomorrow live at Market Open. It is truly expected to be an amazing green day. Until then, I will continue to be in the Discord chat.